13 states are cutting income taxes in 2026, and this could quietly reshape where people move, where businesses grow, and where housing demand shows up next. Because when people think about buying a home, they usually talk about mortgage rates, home prices, insurance, and monthly payments. But there's another number that can change the entire decision: how much of your paycheck you actually get to keep. And right now, 13 states are moving in the same direction: Arkansas, Georgia, Indiana, Kentucky, Mississippi, Montana, Nebraska, North Carolina, Ohio, Oklahoma, South Carolina, Utah, and West Virginia are all cutting income taxes this year. Arkansas just became the latest state to join the list, dropping its top rate from 3.9% to 3.7%. Now that might sound like just another line on a tax spreadsheet, but here's the bigger question: what happens when lower taxes start influencing where people choose to live? Because this is not happening in a vacuum. A lot of the states cutting income taxes are also states that have already been growing, especially Sunbelt and interior markets. South Carolina, Georgia, and North Carolina are on the list. Utah, Montana, and Oklahoma are also cutting taxes after seeing strong population growth between 2020 and 2025. And that's the part real estate professionals, buyers, sellers, and investors should be paying attention to. Think about a family considering a move. They're comparing home prices, jobs, schools, lifestyle, insurance, and affordability. Then they look at taxes. If one state lets them keep more of their income, that becomes another reason to go there. Maybe it does not make the decision by itself, but it absolutely becomes part of the conversation. And in a housing market where affordability is still the biggest challenge, even small advantages matter. Here's the problem: buyers are already stretched. Prices are high. Mortgage rates have changed the math. Insurance and everyday costs are pressuring budgets. So when a state offers lower income taxes, it can create a structural advantage. More take-home pay means more breathing room. More breathing room can mean more buyer confidence, and more buyer confidence can mean stronger housing demand. But it goes even deeper than individual buyers. 5 of these 13 states, Kentucky, Mississippi, Oklahoma, South Carolina, and West Virginia, have formal trigger-based systems that could keep reducing income taxes over time with a statutory path towards zero. That is a major long-term signal. Why does that matter? Because businesses plan years ahead. They want to know what costs will look like, what taxes will look like, and whether a state is moving in a business-friendly direction. When companies have confidence, they expand. When companies expand, jobs follow. And when jobs follow, housing demand usually follows too. Businesses bring workers, workers buy homes. That simple chain reaction is why tax policy can show up in the real estate market. And we are already seeing examples of this kind of momentum. Charlotte, North Carolina, had its best year for corporate recruitment in a decade in 2025, with 15 projects announced, nearly 3,900 new jobs, and more than $424 million in new investment. At the same time, Charlotte saw a 10.3% population gain between 2020 and 2025, according to the numbers in this report. That is the kind of market where tax cuts can add fuel to an already moving train. But here's where this story gets more complicated. Not every tax cut automatically creates a housing boom. Mississippi and West Virginia both cut income taxes this year, but both lost population between 2020 and 2025. Mississippi was down 0.2% and West Virginia was down 1.5%. So the lesson is clear: tax cuts help, but they do not fix everything. If a market has weak job growth, limited demand, or other challenges, a tax cut may only be a small tailwind. It may help at the margins, but it is not magic. Real estate still depends on jobs, wages, housing supply, affordability, lifestyle, and long-term confidence. Ohio is another interesting case. Ohio's cut is one of the biggest in raw terms, moving from a 3.5% top rate to a flat 2.75%. But Ohio's population growth from 2020 to 2025 was modest, at 0.9%. So again, the tax cut matters, but the market fundamentals still matter more. Now let's look at the other side of the country, because while some states are cutting cutting taxes, others are moving in the opposite direction. Washington State recently enacted a 9.9% tax on household income above $1 million per year, with collections set to begin in 2029. California may also be moving in that direction. Supporters of a proposed one-time 5% wealth tax on billionaires submitted 1.55 million signatures in late April, nearly double the number required to potentially make the November 2026 ballot. And this raises a major question. Could higher taxes push more high-income households and business owners out of expensive states and into lower tax states? If the migration patterns of the last decade are any guide, this is something real estate professionals should watch closely, because when people leave one state, they land somewhere else. And when they land somewhere else, they rent, buy, invest, build businesses, and create demand. But again, this story is not black and white. California lost 0.5% of its population between 2020 and 2025, while Washington actually grew 3.8% during that same period. So higher taxes do not automatically mean people leave overnight, but they can become one more factor in a bigger decision. And that is the key takeaway here. Tax policy by itself does not control the housing market, but it can influence the direction of demand. It can help growing states attract more people. It can give businesses more confidence. It can give buyers another reason to relocate. And for sellers, it can affect who is coming into the market and what kind of demand may exist 2 or 3 years from now. So if you are in a state cutting income taxes, this is something to understand when relocation buyers show up. And if you are in a state moving toward higher taxes, this is something to think about when pricing homes, planning investments, or advising sellers. The housing market is not just about homes. It is about people, paychecks, jobs, and long-term confidence. So here's my question for you. Would lower income taxes make you seriously consider moving to another state? Or do you think jobs, lifestyle, and home prices matter more? Drop your thoughts in the comments, because this conversation is only going to get bigger. And if you want more real estate updates like this, make sure to like, subscribe, and follow along. Okay, that's it for today. Thank you for watching, and stay tuned for more updates on the ever-evolving housing market. If you'd like specific market data on your neighborhood, just send me a text or give us a call at 95479968667, and we'll send you the free report. Until next time, this is Joe Hilner with Guaranteed Home Sales, signing off for now. Go serve big, everybody. Be nice to each other, and I'll see you next week.